Always a pleasure to chat with you, Mr. Pawan Goenka from Mahindra and Mahindra. Thank you very, very much for being with us, sir. I will first speak to you about your sector and what really becomes expensive. 28% rate for cars. Disappointed?
No, this was known all along that the cars would, small cars would have 28% rate and that there will be a cess on the so-called luxury cars. The only surprise was the 1% cess on petrol vehicles and 3% cess on diesel vehicles. That was perhaps not expected, but it's not a very big number. And it actually brings the overall excise or overall GST very close to what is the today's rate when we combine excise and VAT. So like in everything else, what the government seems to have done is add up the excise and VAT and keep the rate more or less in that level, and that's what they have done. So there is no surprise. The 15% cess also was more or less known because that limit had been fixed earlier by the GST Council, and therefore none of the rates are really surprised. One element perhaps that was not known was what they will do with the hybrid vehicles, because there was some thought that the hybrids may not get the excise benefit that they were enjoying in the current or GST benefit like what they were enjoying in the excise regime, and that has come to fruition. That is, the hybrids are not getting the benefit of lower GST. The electric vehicles are as per expectation. Tractors, again, as per expectation. In fact, we are somewhat concerned that tractor should not become lower because that will then lead to other complications. So 12% is about the right rate for tractors also. So I would say that overall there is no major surprise in any of the rates that have been announced.
I'm just curious, why do you believe a lower tax rate would have complicated things for tractors? Just trying to understand your point of view here.
Because currently the overall instance of VAT plus excise on tractors add up to approximately 12 to 13%, depending on what is the what is the material cost that a company has. Because even though tractors are on zero excise, the inputs are not. And therefore, there is an input excise tax that happens, which effectively means about 8% tax on tractors, the excise duty. And there's a 5% VAT on tractors. So total is 13%, and that now has become 12%. So the prices remain about the same.
So in terms of life changing for Mahindra and Mahindra, not much of a difference given the new GST. I mean, things are going to be streamlined, but given the new tax rates, we're not going to see significant amount of changes, right?
So yeah, in terms of tax rate, there isn't a significant amount of change, but I have always said that while we talk a lot about tax rate, but the real benefit of GST is in simplifying the business and streamlining everything, in making our business more efficient, and all that remains intact. So tax rate, we had known for quite some time now that any expectation that GST would allow us to reduce prices will not happen. That has been known for almost 3-4 months, and that's where it is. So we were not expecting any major price reduction opportunities because of GST.
But are you expecting some kind of a demand pickup now? Because, I mean, one is given to understand, just empirically speaking, and this is, of course, anecdotal evidence that keeps coming to us, that people had held back on buying or purchases because they were waiting for what the GST perhaps could do. Do you expect some kind of a demand leg up there on that front?
I don't think so, because if you look at the industry growth, both in tractor and in automotive in the last 3 or 4 months, it's been reasonably decent. So there were no indications of demand held back. What you might see between now and June 30th is there may be one specific product somewhere where there's an expectation of price going up post GST, and there may be some little bit of a demand fluctuation happening here and there. But I don't see a sort of macro level or a mass level sudden pull happening for design for buying because of the GST rates, because I don't think that there was any sort of holding back of demand. See, what has happened in the last I would say 6 to 8 months is 2 major events. The demonetization, which has had sort of impact on demand, which has come back, and then the BS3, BS4 fiasco, if I could call it, which has again had a very major impact on the auto industry. So we are just about getting back into shape with that after that. So April was recovery for most segments except for heavy commercial vehicle, and May I think will be roughly where we would be, and then June will continue. So I don't see a sudden spurt in design happening, in demand happening.
I'm going to ask you a little tricky question here. 1% on petrol car cess and 3% on diesel, the diesel cess is obviously a little baffling and surprised us also a little. It surprised you too, and you started off your interview by saying that was a little surprising. I'm just curious to know, does the 3% cess on diesel car now take care of some of the devil that the diesel car makers were being made out to be? Do you believe some amount of the debate is going to be addressed with this?
No. So first of all, this is not a new tax or new cess. Currently in the excise regime, we had I think it was 2.5% on petrol and 4% on diesel. There was a difference of 1.5% between diesel and petrol. All that has happened is 1.5% difference now has become 2% difference. That's all, and that's probably because they wanted to round it off to a whole number. It's not at all new. It's what was there before. What I was expecting was that it will be abolished. What happened was it remained the way it was. So it does not in any way sort of stop the debate on virtues of diesel versus petrol. It doesn't do any change at all. It so happened that earlier also for the larger vehicles there was no difference between diesel and petrol. And same thing remains now. For larger vehicles, there is no difference in diesel and petrol. And for the smaller vehicles, there was a difference of 1.5%, which continues and becomes 2%.
Okay. That's an important clarification, but I'm going to ask you more big picture questions because you just don't represent auto, you also represent Indian industry at large. What do you make of the 4 slabs in goods as well as services? Is there some kind of an attempt in goods to bring down the cost, and in services we'll perhaps see a rise in a few items, whether it's telecom or whether it's other services that we'll just talk about. In balance, of course, policymakers are telling you that in balance the incident of GST or the incident of taxation remains just about the same. If taxes have gone up, they've gone up to the closest bracket. If they've come down to the next closer bracket. But I'm just trying to ask you, what is your overall assessment? Will prices of products perhaps come down, goods come down, but services will be a tad costlier? And that's how the inflationary impact will be balanced?
So I have not fully gone through the service part, which was just announced, but product part, which was announced mostly yesterday, I have gone through. I think the council has done a fairly decent balancing act because there were multiple things that they had to balance. They had to balance any inflationary impact of GST not being there, and I think they have done a decent job because most goods that are of common use or essential commodities will not see any price increase. If anything, they will see a price reduction. They have kept to their word of not increasing the overall tax instances, which is true in most cases. So far I have not found anything where the tax rate has gone up. In most cases it is either same or has slightly come down. They are definitely counting on the economic activity, that is demand going up, which will make up for the slight drop in the tax rate. And I'm personally quite confident that the government of India will be pleasantly surprised by the positive impact that will happen as a result of GST and other macroeconomic factors that we see around. And therefore, there will not be a loss of revenue because of the slight reduction in GST rate. When it comes to service industry has always been concerned, rightly so, that with the GST coming in, there will be a larger impact on service. And I have seen today that some of the rates are as high as 28% or even 18%, which appears to be very high to me. I cannot say right now what impact it might have on individual service items that will be there. But since again service is moderatable in the GST, any service that is coming into the goods will definitely get moderated. The only place where it gets affected is the end product or end service. Since hospitals are out, health services, since education is out of service tax regime, that certainly is good. And I think again here services that are daily common use services that have been kept at 5% rate or 12% rate. So I think they've been again very careful. The question is that how much can you keep taxing luxury? And since on luxury services like 5-star hotels, the tax is 28%. That is a high tax, and whether it's going to slow down demand for luxury is something to be watched. And clearly, for economic development, we cannot afford to see demand for luxury slow down. So I hope that enough price elasticity calculation has been done before defining a 28% rate for luxury. That's the only thing that I would be sort of perhaps concerned about. Other than that, I think it's a fairly good balancing act.
It's a good balancing act indeed, but I was going to touch upon luxury next, and I'm glad you spoke about it. Putting luxury at the 28% bracket is obviously going to discourage luxury consumption, and is also going to, the whole idea by the government is to differentiate between luxury and essential items, and so luxury can be in the highest bracket. But luxury is also a big revenue grosser in that sense. Given the fact that a 28% rate, do you believe could perhaps dampen demand, could dampen consumption in that segment?
Well, let's put it this way, that if you look at cost of luxury in India compared to cost of luxury in many other developed nations, luxury is pretty expensive in India. You take a look at hotels. 5-star hotels even today cost room rate probably is as high as hotels in cities like Paris, New York, Boston. Therefore, if the tax instance goes up, then many people who were today staying in 5-star hotels probably have to downgrade to 4-star hotels, which is loss of revenue. And clearly, that will then again have a negative impact in overall collection. So I don't know enough about the industry to know, frankly, to know what the price elasticity is. But clearly, there is a threshold above which an individual will not want to pay. And may decide to downgrade his or her use of such luxury services, which will then become negative. So that's one thing that one has to watch. That applies for almost everything: restaurants, hotels, whatever is being defined as luxury service. And I don't know how many things are coming under luxury service. I didn't watch the details very carefully today. But whatever is coming in 28%, I would be somewhat concerned about that. As dampening demand. To take the view that yes, luxury can be taxed more, perfectly fine logic, but whether it will dampen the demand and therefore have a net loss of tax revenue is something that one has to look at.
Indeed, and I'm sure the government would be concerned about that. But before I let you go, I must ask you the level of preparedness as far as Indian industry is concerned. How are players like yourselves prepared for a GST rollout? Is 1st July pragmatic? Is it doable? Would you want more time to understand implications? Would you want it to be 1st September? I'm just trying to understand, what do some of the tallest captains of Indian industry have to say? When are you comfortable with, as far as the GST rollout is concerned?
So let me first say that now that the rates have been announced, it will be detrimental to delay the launch of GST beyond 1st July, because a lot of sort of calculations will start happening starting today. There will be postponement of purchases, there will be preponement of purchases, there will be increase in stock, there will be decrease in stock. All these things we have to do, consumers will have to do, distributors will have to do, suppliers will have to do, to sort of minimize the transitionary impact of GST. So we have about say 6 weeks from now for 1st of July. I think it became 10 weeks, 12 weeks. It's going to be detrimental, because then there could be a sudden change in demand or a stoppage of buying that could happen. So my first statement will be 1st July now becomes very important, and it should not be delayed. Second is preparedness. As far as Mahindra and Mahindra is concerned, or Mahindra Group is concerned, and I would presume that's true for almost all large corporations, I think we are reasonably prepared. Since we were originally looking at 1st of April as the date of GST launch, we had started working in October, November last year. And actually, frankly, we got 3-month grace. So we are reasonably prepared from our point of view. Our immediate sort of upstream and downstream, that is dealers and suppliers, I think also are reasonably prepared. Where we may have problem will be in tier 2, tier 3 suppliers where they may not have had done all the work to it. So I don't think that at least in auto industry, there will be a serious concern about being ready for July 1st. Okay. I don't think I can say the same thing for the whole country, for all businesses, for all, especially for service businesses, whether they have all the preparation done or not. And I don't know enough to be able to say whether the government has everything in place for July 1st. But I would have to say that now there should not be any rethinking on July 1st date, and we should just go ahead and do it. If it leads to certain amount of complexity, certain amount of chaos for the first month, so be it. That will happen no matter when we start. There will be some chaos in the first month or so. It doesn't matter, but we must do it on July 1st.
Actually, one of the things I think that people did not want the rates to come out so soon was there'd be so much of lobbying back and forth and what should become less expensive and more. But before I let you go very quickly, I think the Revenue Secretary has been on record to say that the government will have the right to go through balance sheets of companies to see if they are passing on the low tax incidence to consumers or not. Is that a little too intrusive as far as operations are concerned?
As long as it doesn't become harassment, I don't see it as being intrusive because it is appropriate for government to expect that the benefit that they're expecting to see because of GST in terms of some price reduction and therefore demand generation and therefore economic activity improvement and therefore GDP improvement. I think it's appropriate for government to do spot checks, audits, to make sure that companies are not trying to use this as a profiteering mechanism. So I'm quite okay with that, as long as it doesn't lead to harassment. I think in auto industry, it's a fairly simple thing to do because we have our ex-factory price. And as long as ex-factory price remains what it was pre-GST, then whatever happens because of GST rate versus excise VAT rate is an open book. And I don't think it's that complicated for anybody to draw a conclusion. So I think it's okay. By and large, it's okay for the government of India to do a check to ensure that companies are not profiteering or not trying to take undue advantage of any rate reduction that might have happened because of GST. At the same time, we should also be allowed to go the other way. When there is an increase in cost because of that, we will have to increase the selling price also. That cannot be stopped.
All right. Is it too premature to ask you a question? And this is going to be my last question and I'll let you off on that. Is it too premature right now, Mr. Goenka, to ask you the question about what kind of a cost impact, the impact on, cost of operations will the GST have? Are there back of envelope calculations that Mahindra and Mahindra, I know it is going to streamline and simplify things and one India, one tax and all of that, but is there at all any kind of calculations done on the cost impact it may have on operations and in turn on margins at all, or is this premature to discuss this right now?
Okay, it's not premature. We have Excel sheets ready, but how much of it I'm able to share with you, I don't know. Especially since right now we are in a silent period, our results will be announced very soon, so I cannot talk about anything that will have a financial impact, and hence I will have to defer this question to our next meeting when I will be able to share with you in more detail. But overall, what I would have to say is that if we are going to keep our ex-factory selling price, that is pre-excise, same as before, there will be only some sort of compounding or cascading impact that will happen. Cannot quantify that today, but we'll be happy to do it after some time.
Mr. Goenka, it's always a pleasure talking to you right here on ET Now. Thank you very, very much for speaking to us, the Managing Director of Mahindra and Mahindra, one of the biggest auto majors in India.
Could I just add?
The channel that matters on the day the GST rates are finally out. Thank you. Sure, go ahead.
Could I just add one or two things? Sorry. See, one thing that we still are concerned about, and I hope that gets clarified between now and the next couple of weeks, is what happens in transition. Especially on the tractor side, there is no clarity on tractors that have already left the plant. on whether we'll be able to get a set off on the excise that we have already paid on the components of tractor. That's very important because we will have approximately 5 to 6, 7 weeks of supplies in our warehouses or stockyards or dealers. So I hope that gets clarified. And similarly on the automotive side also, though the problem is a little less severe, but it still remains a problem on ensuring that we don't end up losing out lots of money or lots of excise that we have already paid. And there's a mechanism by which everything gets balanced off and set off against the GST. So that's the only sort of transitionary concern that we have, which we are hoping will be taken care of in the next couple of weeks.
I'm going to ask that question to policymakers, and I hope to revert to you, even if it's not on air but offline on the phone when I have answers from policymakers on both those points. But on that note, Mr. Yes, and you will have your answers, I promise you that, by the end of day today. But thank you very much for coming in, Mr. Goenka, on that.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.